PayPal announced their earnings today and the stock's really moving down. What happened? What did the market not like about PayPal? This stock has been working for the past year. It's up 43%. Very nice, PayPal. But now it's going to go down 8%. Is that deserved? Is the financials that bad? Let's take a look. The company is selling at a forward PE of 18. That represents 2025's numbers. Analysts, and quite a few of them, believe that the stock is fairly priced. When I look at the most recent quarter, the company did slow down its revenue growth. That is disappointing. And especially the trend where we're seeing that revenue is slowing down. That is a problem. I could understand analysts and investors not liking that. I don't like it. I'd rather see revenue expanding. Now, the economy isn't doing all that great. It's not doing bad either. If that consumer can start buying more with PayPal systems, that would certainly help the company. How can they grow? Now, revenue isn't growing as fast as I'd like. The company still is profitable, and the free cash flow it's been generating has been good. It generated $6.7 billion of free cash flow, which, as you can see, is an increase from previous years. That is positive. Most of the value that I calculate for PayPal is derived from this high free cash flow. Free cash flow tends to be that one metric that the most valuable companies, the ones that get it really priced high, tend to have. And PayPal has very good free cash flow. So I'll use that in my valuation. Their margin on free cash flow is very high. Excellent. So a little disappointing on the top line revenue, but the free cash flows are very strong. 29 analysts cover the stock and they believe it's fairly priced. Now, it has gone up about 40% over the past year. So that's been a positive appreciation trend. And I'm glad that I own the stock and saw that appreciation. We're seeing that growth is going to be slowing down, but then picking back up in 26, 27, according to analysts' predictions. The earnings per share is going to expand just a little bit in 2025. And when they apply an 18 PE, they get to where we got, which was a stock was fairly priced. I'll use those metrics as well in my valuation. When I value PayPal, I get a 63% discount on the stock because those free cash flows are so high. And you can't ignore the fact that a company generating $6.7 billion and growing that level of free cash just has an intrinsic value that's very high. And they don't really carry any debt. They have more cash than debt. So my valuation is much higher than what analysts are seeing because they only focus on earnings per share. I have a very big position of PayPal, around $80,000, and I'm going to sit tight. I'm not going to buy any additional shares. I'm going to hold my shares and wait this one out. I want to see their top line revenue begin to grow. I do like their products. I like the fact that they have Venmo as the number one cash app. I do like that they're operating in the buy now, pay later business. They're doing some really good partnerships with other companies like Amazon for their Prime service, Shopify. Those things look really good. So Venmo and the buy now, pay later business looks exciting to me. The other last thing is they have their own cryptocurrency and they're getting further into crypto. That could also be a growth catalyst in an area where PayPal can have an advantage against the likes of Visa, MasterCard, and American Express. So let's see how this stock performs. And I hope you found my analysis interesting. Let me wish you the best of success in investing in 2025.